Hey, what's up guys? Welcome back to the channel. Welcome back to another video. If you're stopping by the channel for the first time, please consider subscribing to my channel. And while you're at it, smash that like button for me. I really would appreciate it. I want to give you an update on the stock market. Now, again, like I've said in many videos, this is not a channel where I'm going to have all these fancy graphs and I'm going to use all these fancy words that none of us can understand as a common folk retail investor. I'm just going to give it to you the way I see it, right? Now, there are other channels out there that go in all these analytics and all these fancy words, but my channel is not really built on that. My channel is just built on an everyday guy like me with limited knowledge of the background workings of the stock market, giving you what I've uncovered through my experience of investing my own money into the stock market and what it's done. Now, I know some of you guys are going to see the title of the video and be like, oh, what is this guy talking about? The stock market is a scam, blah, 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 clickbait, clickbait. No, I'm just trying to get you guys to understand the psychology of the 1%, which is the richest and the most wealthy people in the world, right? And this is how they manipulate the stock market in order to keep themselves in a position of wealth. And really, the 99% of us, we fall into this category of people who believe the stock market is a scam. Why? Not because, we just haven't been taught anything different. You know, we watch TV, we watch the news, we watch all these shows about the financial markets, and that's where we form our opinion at. And a lot of that stuff, guys, is just fear, pushing fear, right? And the reason the 1% push that fear is they want us to always be in the opposite direction of what the stock market is doing. So, for instance, the stock market right now, a lot of people might say, well, the stock market has peaked. You know, man, it made a nice rally. It's peaked, though. Again, what is that telling you, though? See, they're saying, okay, you've got a nice little return. Take your money out of the market. Take it out now because it's about to drop, which in actuality, guys, it's not, right? The stock market isn't doing anything it hasn't done over the last 10, 20, 30, 50, 100 years, right? It has ebbs and flows, peaks and valleys. But again, as I've mentioned in other videos, there's not a 10-year period in the history of the stock market where it has performed over a 10-year period in a negative performance. It hasn't had a negative performance in a 10-year period of time. But what the 1% want us to do is to always be in fear and always panicking, right? See, the 1%, they keep their wealth in two places. They keep it in the stock market and they keep it in real estate. Now, some people might say, oh, they keep it in gold and silver. They keep it in, no, they keep it in real estate and they keep it in the stock market. Why? Because those are your two best performing assets over time, right? So when these people, if that's where they're keeping their money, us as retail investors should be also thinking about that's where we should be keeping our money at all times. Now, I know it's scary. It's scary for me. I got a lot of my net worth in the stock market. About 70% of my net worth is in the stock market right now. But am I panicking? No. Why? Because I understand the psychology of how the stock market works. So, when can the stock market decline? Let's talk about that real quick. The stock market can decline for many reasons, but let's talk about three reasons. First one is if the federal government doesn't pump money into the system, right? And what that means is if the government doesn't allow companies to borrow money cheaply, then companies sometimes will pull back and not grow. They may not expand. They may not pump more money into producing more products and services and things like that. See, when companies can borrow money cheaply, that means they can go hire more people. That means they can expand. They can do R&D because they can borrow the money cheap. And then on top of that, once they borrow that money cheaply, guess what? They can then take the money and multiply it by expanding and creating new products. So that's one of the reasons why the stock market could decline when companies contract. Instead of expanding, they contract and pull back, which is basically makes them less profitable. They don't have as much revenue. That can make investors feel like, okay, that's not a good place to put my money to get a return. If this company's not growing, then my money won't grow. Let me take my money out of the stock market. Let me put it over here in real estate. Let me put it in something, another asset. So that's one reason the stock market could decline. The other reason the stock market could decline is what? Rising interest rates, right? Rising interest rates can, again, make the stock market decline. And the reason being is because if I'm a normal guy with, $15,000 and I can go somewhere like a bank when interest rates are rising, right? Banks pay more for certificate of deposits. They pay more for money market accounts. They pay more for savings accounts when interest rates are rising. So as a guy with 15 grand, I can say to myself, well, hell, I can go to the bank and get me a CD for 2.5% interest rate. My money's guaranteed. I'm not going to lose my principal, or I can take my chances of put it in the stock market and I could risk losing my money. So when interest rates are rising, banks pay more for deposits. So people tend to go that safer route because now they're starting to get a 2%, 2.5% rate from the bank instead of 0.50, right? See, that's one of the reasons why the stock market could decrease, is because retail investors like us will take our money out and put it in the bank because we can get a little bit higher rate of return at the bank when banks raise interest rates, right? And then obviously the third reason the interest rate could fall is when companies, or if investors feel like companies are overvalued, right? They're inflated. Like some of the growth companies like Tesla, Netflix, some of these guys who really were buying their stock price is based on future earnings, right? What they could be in the future. That's what the stock price right now is based on. So when the market feels like those companies are overvalued, again, investors take their money out, and turn does what? Stock market goes down. So I'm not saying there is not real things that could make the market go down. But what you got to think about is how long is that going to last? Again, there's not been a 10-year period that the stock market, over a 10-year period, not in the history of the stock market, where it has performed at a negative. So all I'm telling you guys is, yes, you want to be aware of what's going on. We do want to know what's going on when it comes to the financial markets. But here's the deal. Keep your money in the market. Long term though, right? I'm not saying you don't move it from one investment to another investment in the market. What I'm saying is you don't completely take it out of the market and then you put it in the bank or you put it in the safe at home. No, you don't do that. See, that's what the 1% want you to do, right? So right now you're hearing, okay, we're peaked. The market is peaked. The reason you hear all that propaganda is because now they want you to take your money out again. Why? Because once you start taking it out again, guess what's going to happen? It's going to go back down again, and then that's what they're going to do. They're going to swoop in and buy those shares again at a lower value, and then guess what? Then they're going to pump it back up again till it's peaked again. So all I'm saying is don't fall into that trap. What you should be doing, guys, is dollar cost averaging into the stock market and good investments like exchange traded funds or ETFs or index funds or a sector ETF. And I've done a video a couple weeks ago where I gave you the 6 best investments to make. And I'll actually link that video in the description box of this video because I want you guys to look at that. And really those 6 things were what? All Vanguard solid performing ETFs. Vanguard S&P 500 VOO. Vanguard Total Stock Market VTI. Vanguard Information Technology VGT, Vanguard Consumer Discretionary VCR, Vanguard Healthcare ETF, right? VHT, and then Vanguard Real Estate ETF VNQ. Those are 6 ETFs, man, that I'm telling you guys, if you put your money in them long term and your dollar cost average in every single month, you give yourself a real good opportunity over a long period of time, 5 years, 10 years, 15 years. You give yourself an opportunity to really build wealth through proven, historically proven vehicles like I just mentioned that Vanguard offers. Now, Vanguard is not the only company out there, guys, that offer ETFs. Only reason I'm mentioning Vanguard is because that's who I use. And that's who I have my personal experience with. And that's where I've seen my wealth over the years grow based on me dollar cost and averaging in every single month, man. Find a dollar amount, guys, that you can afford, right? I don't care if it's $100 a month, $500 a month, $1,000 a month. Put it in every single month in those same investments I just talked about. Now, again, guys, I'm not your financial advisor. I'm not an investment advisor. I'm just giving you guys what my experience has been. You got to decide what you want to do on your own. But one thing you can't do is be manipulated into thinking the stock market is a scam, because it's not. Guys, the wealthiest people in our country, I'm talking about the billionaires in our country, they keep their money in the stock market. They keep their money in real estate. Well, all right, guys, drop me some comments and let me know if you think the stock market is a scam, and let me know what you're doing with your money. Are you dollar cost averaging in? I hope you are. If you're stopping by the channel for the first time, please consider subscribing, share the video, smash the like button. Thoughts become things. If you can see it in your mind, you can hold it in your hands. You guys keep chasing your greatness. Never stop believing in yourself. I'm going to catch you on the next video. But if you want 5 free stocks, Webull is going to give you 5 free stocks. When you open up a new Webull brokerage account, put at least 1 penny in that account. They're going to give you 5 free stocks valued up to $9,600. So after the video, I want you to go down to the description box of the video. Click on that Webull link. Open up your new account today. Go get that free stock. Go get that free money. Today's video is sponsored by my company, RF Financial Consulting. And in my company, I work with individuals just like you through financial mentoring and coaching sessions. And in those 1-hour sessions, we talk about strategies to help you get to your financial freedom, whether it be through real estate investing, stock market investing, creating additional streams of income, credit card arbitrage, or starting and growing a business. If that's something that you might be interested in, there's an email address in the description box of the video. Send me an email and let's discuss if I'm the right fit for you.